Meet Tim. He works hard for his money. The problem is almost half of his money goes to taxes, and this leaves him feeling cheated and disappointed. Tim often wonders how the rich people around him with the nicer clothes and better cars accomplish that with how much the government takes out of a paycheck. Well, the secret is there is something that the rich people of the world have known for years that Tim has no idea about. They know that there are two different tax systems, the one Tim knows about that swallows your paycheck, and the other one that the rich use that saves your paycheck. One day, while searching the internet for help, he found www.evolutiontaxcenter.com. Evolution Tax Center explained the tax system that the rich use to keep more money in their pocket. What did it tell him? Develop a home-based business that the government will pay you to start. Doing this will qualify you for significant tax deductions, slashing your bill by as much as 50%. These are Congress-approved tax breaks available only for home-based business owners. It is 100% legal and audit-proof and easy to maintain. In fact, a home-based business only has two requirements. 1. Run your business on a regular and consistent basis as little as 4 hours a week. 2. Run your business for the intent to make a profit. If you meet those two simple requirements, you will put around $5,000 in your pocket every year. Congress has passed more than 100 tax deductions for home-based business owners. A few examples of these are 1. Business use of your home, the home office deduction, mortgage interest or rent. 2. Business use of personal vehicles, mileage, maintenance cost. 3. Hire your children. Yes, hire your children to do their chores. 4. Deduct 100% of your out-of-pocket health and medical care costs. 5. Lunches, dinners, ball games, theater tickets, health clubs. 6. Your utilities, gas, electric, water, trash. 7. Marketing, advertising, promotion, business development. 8. Accounting, bookkeeping, legal fees, training, consulting, tax preparation. 9. Cell phones, internet. The list goes on and on, just about any other expense that is ordinary and necessary. Tim couldn't believe what he was learning. It was all starting to make sense. He knew what he had to do now, but he had always heard that starting a business was very expensive and risky. Tim was right. Some businesses are hard to run, but some are not. Evolution Tax Center has worked out the perfect system for starting a low-risk, home-based business. Tim got in touch, started his home-based business, and unlocked many of the tax benefits available to home-based business owners. And now it is your turn to unlock the tax savings that starting a home-based business can offer you. Evolution Tax Center is offering a free 12-minute webinar to show you how you can save much more of your hard-earned money, just like Tim did. What will you use your extra cash for? Buy a new car? Pay off debt? Your retirement? Whatever you are going to use it for, you have to start getting the benefits today. Don't waste any more time giving your money away. They've put all of this information together for you in a free 12-minute webinar which will change your life. Enter your information below to schedule a time and your free consultation now with one of our tax solution specialists and start getting the money you deserve today. Call us now.
How would your life be different if your mortgage was paid off
in as little as 5 to 7 years from now
with no change to your current budget?
We want to show you how a proven
debt elimination system
can pay off all your debt,
including up to a 30-year mortgage
in as little as 5 to 7 years
with no change to your current budget.
That's right.
No mortgage payment, no credit card payments,
no debt payments at all.
With over $2 billion in debt eliminated already,
with the assistance of this debt elimination system,
consumers across the U.S. are finally able to build their own financial dreams
instead of building their lender's wealth for the next 30+ years.
To learn more about how this amazing debt elimination system works and to receive a free savings report that shows you how quickly you could be completely debt-free, including your mortgage, simply fill out the contact form on this page and we'll rush this amazing debt elimination system information to you right away. All across America, people are needlessly overpaying the interest on their mortgages and other debts without even knowing it. In this video, we will show you how thousands of people in the U.S. are saving interest and paying down debt faster than they ever thought possible. So let's get started. Over the years, companies that have created products and services that help to change our lives for the better, such as Microsoft, Apple, eBay, and Starbucks, received the Ernst & Young Entrepreneur of the Year Award when they first started. It's a highly recognized award, and Ernst & Young is known as one of the top 3 accounting, tax assurance, and financial services firms in the world. The creators of this revolutionary interest savings system received this same award in the financial services category. The creators of this program have also been recognized by publications such as Success Magazine, Mortgage Planner, True Wealth, and Broker Banker. Plus, they've received the Editor's Choice Award from Personal Real Estate Investor Magazine. So what is this interest-reducing system? This revolutionary program is an easy-to-use financial system, which uses key money-saving principles to help you eliminate debt quickly and save interest. We would now like to review 4 of these key money-saving principles. The first money-saving principle is strategic payoff. The second one is interest accumulation. The third key principle is interest float. And the fourth is interest cancellation. Here's what an amortization schedule looks like on a 30-year, $200,000 loan at 4.5% with a payment of $1,013. If this client makes their payment as scheduled, by year 20, we can see that they have barely gained half of their equity, yet they've already paid over $243,000 in mortgage payments. And at the end of 30 years, they will have paid over $364,000 for their $200,000 loan. That's over $164,000 in interest payments. In other words, they will have paid over 82% of the original amount they borrowed just in interest payments. Banks hold depositors' money as long as they can to leverage themselves. They wait until the last possible minute before dispersing funds to various accounts so they can, in the long run, hold on to every cent. This is how they continue to make significant profits. Now, it's your turn to have a system that runs the strategies and calculations for you, allowing you to use your banking system to bank like a bank. This system has many thousands of math algorithms working for you. That means that your system is tailor-fitted to your specific financial situation, using existing banking tools at your bank. We just provide the online financial system and education to get you out of debt the fastest way possible based on your unique situation. Let's discuss the first of the 4 money-saving principles, strategic payoff. The system recalculates each time you have a change in the amount owed, interest rates, the ratio of principal applied versus interest paid, and many other determining factors. Fortunately, the system determines all the correct factors for you. Let me introduce you to Bob and Katie. Bob and Katie make $5,400 per month net, or after taxes, and they spend a combined $5,200 per month on all their debts, expenses, and entertainment. This means Bob and Katie only have $200 left over at the end of the month. Do you need $200 to make the system work? No. You just need to spend less than you make, and we can show you as little as $1 left over will work. Here are their liabilities. Bob and Katie have direct deposit with the companies they work for, so their paychecks go into their checking account. The system prompts them to transfer that $5,400 from checking into savings. So for the sake of demonstration purposes, realizing that everyone's situation is different, we're going to say that Bob and Katie can pay all their bills on their credit card or line of credit. We realize that the online system will be customized for you, and that your financial situation will be different from Bob and Katie's. A credit card or line of credit is not required for the system to work. We're just keeping things simple so that you can understand the general gist of how the system works. So, they pay for their food, gas, and all their household expenses, including all the bills shown here. Because their living expenses are $5,200, this means that they now owe $5,200 on that credit card or line of credit. The system now takes that debt into consideration and will address it the following month. You will notice that the debt amounts have changed because they continue to make their regular minimum payments as scheduled. So in month 2, their savings account paid Bob and Katie $13 in interest. Now they have $5,413 in their savings account. This is the second money-saving principle, interest accumulation. The system prompts them to take $3,884 from savings and transfer it into their checking account. After that, the system prompts them to take $5,200 and pay that credit card down to zero. We used someone else's money for 30 days and paid them no interest, and allowed our money to work for us at the same time. This is the third money-saving principle, interest float. It then prompts them to take $4,084 from their checking account and pay towards their primary mortgage. And identifying an additional strategic transfer, the system calculates an exact amount of $798 and prompts them to transfer this amount out of their savings onto the Visa. So this is what the beginning of month 3 looks like. We now owe less on the mortgage and less on the Visa. And this is what happened to the mortgage. Their new balance is $195,652. Their interest rate and minimum monthly payments stayed the same, but they canceled 15 months worth of mortgage payments and saved $11,162 in interest. This is the fourth money-saving principle, interest cancellation. What does this mean to you? If these were your numbers, you could now pay yourself what you would have been paying the bank, because you would no longer have to pay those additional 15 months at the end of the mortgage. You can see how powerful this is. Can you do this on your own? Perhaps, with many hours of strategizing, overanalyzing, calculating, and constantly updating, and providing you're a math genius. But this system calculates each strategic move for your money, making sure the timing is perfect and that each penny you have is working hard for you. The system will do many of these strategic maneuvers throughout the life of your debt payoff. So let's recap. Here are Bob and Katie Smith. They're 40 years old. On the conventional side, they will be paying on their debt until they're 70 years old. That is 5 years after retirement, if in fact they can retire at that point. With this time-saving system, they will be debt-free at 52 years old. That's 13 years prior to retirement, and they can pay themselves instead of their creditors. Plus, they saved over $101,000 in interest on their mortgage and over $38,000 in interest on their other debts. It is important to understand the financial implications of holding on to debt. Holding on to debt will always cost you more money than you can earn on your own. As a society, we are emotionally involved in thinking that making more money is our answer. Yet, it is our debt that in reality holds us back from achieving our ultimate financial goals. Sometimes people say, I could try and do this on my own. So let's take a look at what would happen if Bob and Katie sent their $200 discretionary income each month to their mortgage. First of all, this is not what the system does. It does not require you to increase your minimum monthly payment. Second, we know that most people will only do this for a short period of time because, well, life happens. However, if they did send in the money, they would not have access to those funds, and it would only eliminate around $52,000 in interest. This dynamic system saves you over $140,000 in total interest payments without having to increase your minimum monthly payment by $200 every month. Remember, with the try it yourself option, Bob and Katie are not even addressing their other debts. You might be doing something to eliminate your debt, or you may be doing nothing. Either way, we have something here that will get you out of debt faster than any traditional method, book, CD, DVD, or class will ever teach you. No more calculating your debt, interest rates, payment, and guessing which combination will save you the most money and time, because the system is personalized with your information. The system is doing the calculations and factoring the money saving strategies for you. And you have a clear, easy-to-use plan that is in line with your goal of getting to the fastest way to zero. And what if life throws you a financial curveball? Well, the system simply adjusts the plan and gets you back to the destination of zero debt, and it's guaranteed. Our online financial system helps you clearly see what your financial choices really do to your overall financial picture before you make those decisions. If you decide to do an addition to your home, buy a boat, or whatever, the system will show you the impact, recalculating the years to pay off and the amount of interest you will pay. This is so much more than just paying off your debt. It's 20/20 financial foresight. The visual representation of the program, showing you when you'll be debt-free, is what we like to refer to as the financial GPS. It not only guides you to quickly pay off debts, it helps you stay focused. Just like with a New Year's resolution, we often lack the discipline to follow through to the very end. It helps you to track success. The system doesn't just provide you with a one-shot analysis of your situation, but it clearly directs you, even if you make a few wrong turns. It also helps you to save for your retirement. For example, let's assume you had this 30-year mortgage at $1,013 per month and paid that debt off in 12 years like Bob and Katie. What if you kept paying that $1,013 to yourself or to an interest-bearing account for the remaining 18 years? We guarantee everything to the month and year you will be at zero debt, and to the penny on what you will save in writing. All we ask is that you follow the system's simple prompts, and you will achieve the guaranteed savings as stated in your free savings report. This life-changing system has helped homeowners all across America pay down hundreds of millions of dollars in debt ahead of schedule. We believe that everyone who would like to have a brighter future should hear about this money-saving system. To see a video demonstration of the system live, just click on the demo video link. Then the next step is to call for your free savings report. This report will show you how much time and money you can save with no account numbers, no social security numbers, and no credit checks needed. Thank you for your time. We hope you'll take advantage of this opportunity to experience greater financial freedom. From the debt elimination video, you have seen the amazing debt elimination and interest reduction power of this program. But did you know this program also helps homeowners to build wealth and create significant residual income? Let's look at one example of the program's amazing wealth building and income generating power. From the previous video, we saw how the program pays off mortgages and other debts in record time. But our couple wondered, what would it look like if we also decided to invest in a rental income property and secure a renter? To see if this would be a good idea, they opened the program and entered a new mortgage amount of $225,000 for the rental and added a rental income of $1,400 per month. Then the system calculated its financial strategies and showed that both the primary mortgage and their new rental property could be completely paid off in just 7.7 years. Just 2.7 years more. Seeing the benefits of what the program can do with just one rental property, our homeowners wondered what adding a second $225,000 rental property would look like, again with a rental income of $1,400 per month. After adding the new mortgage for their second rental property and adding the second rental income of $1,400 per month to their program, the system now shows both their primary mortgage and rentals number 1 and 2 could be completely paid off in just 9.7 years. Amazing! And they absolutely love the idea of increasing their income by $2,800 per month. So then our homeowners wondered, if we could get these kinds of results on 2 properties, what if we added more? So, keeping it simple, they added another $225,000 rental property into the program at a rental income of $1,400 per month. Following the system, our homeowners found that all their properties, including their third rental, could be paid off in just 11.5 years. and their fourth rental in just 12.8 years, and their fifth rental in just 14 years, and so on, up until their 15th rental, which could all be paid off, including their primary home, in just 20.4 years. So while their neighbors still have approximately 10 years left on their mortgage, our example homeowners could have 16 homes paid off free and clear. Wow, they thought to themselves. That means our monthly income could grow by $1,400 as each property pays off. And over 20.4 years, that could build to an additional residual income of $21,000 per month and a real estate portfolio value of over $3.3 million without adding a penny in real estate appreciation. So, our homeowners asked themselves the obvious question: why would anyone pay on a single mortgage for up to 30 years when you could be building a huge residual income and investment property portfolio that you own free and clear in far less time? We think the answer is obvious. Now you have the tools and knowledge to be debt-free and building wealth in far less time than it normally takes just to pay off your primary mortgage. And each client that activates on the program is provided with live success coaches. These coaches show you how to easily use the program for debt elimination and wealth creation. And they provide you with expert assistance and options when it comes time to identifying, buying, and managing your first, second, third, and so on income-generating rental properties. How many income-generating properties could you own free and clear in 5, 10, or 15 plus years with this program? Oh, and we haven't even talked about the possibility of a vacation home. Get back with the representative that sent you this video and ask them to run a free financial report that will show you how much time and money you could save and how much income and wealth you could build. Stop throwing your hard-earned money away and start building your financial future today.
A lot of people ask me, why did you start United Financial Freedom? And what was your reason for that? And the simplest answer that I can give them is, I hate debt.
When I was a kid, when Skylar was a kid, we had similar experiences. You know, my dad got laid off from his job, ended up losing our house in foreclosure.
You know, I remember the repo man backing into the driveway and hauling off the family cars. I remember the house being foreclosed on and having to move out.
You know, that kind of thing sticks with you. It's hard on a family.
I witnessed firsthand what the stress of excessive debt can do to a family. And I just learned in the long run that it's absolutely something that I want to avoid at all costs. It's something that I wouldn't want to put my family through.
I've got a best friend.
We've been friends ever since we were 2 years old.
Just always known each other. I really don't even remember not knowing Skylar.
And we truly found that we worked well together. We helped to build each other up. We helped to encourage each other.
Naturally, we thought of, growing up in humble circumstances to try to build something exciting.
So at about the age of 20, we're about a month apart from each other in age, we decided that we wanted to go through and open a mortgage company. As we watched our clients, not all of them, but a fair amount of them going in a worse and worse financial direction, is that many of the financial decisions that they were making could have been avoided had they had just a little bit more knowledge, a little bit better understanding of their finances.
And we saw our same customers making those same mistakes, coming back, refinancing, hitting the refinance, hitting the reset button, and pulling more debt in and just terming it out longer.
And so it was at that point that we made the decision that we have got to find some financial solutions for these people.
It just was in both of us to want to help people not experience the same hardships that we did as growing up as kids.
We do not believe that people are destined to fail financially. We know that debt is a necessary part of most of our lives, but I don't believe that it's something that needs to control our lives.
I think it just comes down to freedom. You know, united financial freedom. America is a land of freedom and liberty, and being stuck and having that thumb drive you down of that 30-year burden is not freedom.
The average homeowner in America does not have a dream of being in debt for 30 plus years. They would love to be able to be out of debt, building their own financial future, freeing up their time for their family.
The Money Max account is just a whole new revolution of the way you look at your finances.
We have watched homeowners' lives transform for the better. With the Money Max account, you literally are able to go from a 30-year mortgage down to, say, as little as a 5 to 7 year payoff, and then all of a sudden, you have all of these financial opportunities open up to you.
And the program comes with support. We help you, coach you, teach you, educate you on the product, and then you take over. And a light turns on and you start to realize your own true financial potential.
The average person out there, if they're simply given the right tools and the right direction, the right knowledge, they would be shocked at the difference that they could experience in their financial future compared to the course that they're currently on.
And that's what the Money Max does.
Is it shows you how you can literally go from a 30-year mortgage down to as little as a 5 to 7 year payoff on your mortgage, and then take those payments that you're no longer having to pay your lender in the form of debt payments, and literally convert those payments into wealth for yours and your family's future. You know, something that helps me, that truly drives me on a daily basis with what we do, is hearing the feedback from people who have been using the program. People that were scheduled to be, paying on their mortgage and their debt for 30 plus years, who got on the program 5 years ago or 7 years ago. They're completely paid off.
He's paid off 2 homes and he's working on his 3rd one right now. So that to me is just so rewarding, because I know that guy's going to be set for life. He gets it. He's not going to retire with debt. He's going to retire with assets and with income and be able to do what he wants.
They've got so many different possibilities now. The thing that's so exciting is when I can hear that excitement in somebody's voice when they tell me about how they went from this sounds too good to be true to not only have I paid off my mortgage, but I paid off all of my debt. And now I bought another home and I'm halfway through paying that debt off.
It's so exciting to see this vision that both me and Skylar have had catch in the eyes of other people. It's like a sparkle. It's a breath of fresh air. It's a movement beyond just me.
Another thing that makes my job so enjoyable is the people that I get to work around, both at our home office and independent agents across the country.
They're on the same page as us. They want the same thing. They want to help people.
We've got so many people with so much talent and so much knowledge and understanding of what it takes to be able to make this work.
And they get it. They're just super talented. We've got a great team to help you achieve your financial goals.
The one thing that I would like to say in closing is that while I am so excited about the number of people that we've been able to work with to be able to help pay off billions of dollars in debt, we haven't even begun to scratch the surface of what this program can do.
We live in a world that is buy it now, pay for it later, and that's gotta change.
People go through and they'll refinance 2, 3, 4 times in their lifetime to the point where they're in debt until they can barely work anymore.
That trap can go away, and you can pay off your home in 5 to 7 years. By the next time you were going to hit reset, you could own your home free and clear.
The reality is the average person out there does not have to spend the next 30 plus years of their lives making payments to lenders.
There is a better way, and we've developed a product to help you see that better way and to drive you to help you achieve your true financial potential.
I don't believe for 1 minute that the average person needs to spend the next 30 plus years of their lives making payments on debt.
There's trillions of dollars in debt, and it's spread all across the United States and all across the world. And we can make such a difference in people's lives if we join together, unite in financial freedom.
There's so many different possibilities with this program. I'm just so excited for what the future holds, and I can't wait to see where this thing goes.
Welcome to the most beneficial cash transformation system in the world. This is the first step in taking control of your financial future. This intuitive online system enables you to use financial strategies that the banking industry has used for decades to transform scheduled interest payments into wealth. Here you will maximize your cash flow, increase your net worth, and pay off your debt in record time. At this point, you may be asking yourself, how is this program different than every other financial tool out there? Well, simply put, most financial tools currently available tell you the same old thing, what you've done in the past. But this is where the biggest problem lies. You cannot change the past, so why dwell on it? Never before has a system existed that shows you where you are today, where you're going tomorrow, and exactly how to get there. One of the best things about this program is that it works for consumers in many different financial situations. To illustrate this, we would now like to introduce you to another homeowner example, John and Rebecca Jones. When you first log into the program, there are a few things you will find different than any other financial tool you have seen. For instance, at the top, you will see what we refer to as your financial dashboard. Just like a GPS in your car, the financial dashboard shows where you are, where you're going, and how quickly you will get to where you want to be financially. And because the program monitors your finances 24 hours a day, 7 days a week, if you make a wrong turn financially, the program recalculates based on your current situation to get you back on track, thus helping you to achieve your true financial potential. These financial dashlets or focus points can be changed to show you additional information, a few of which are years to pay off, interest saved, and interest remaining. Below the dashboard, you can see 4 easy navigation points on the left: action plan, budget, accounts, and reports. To the right, you can see settings, help, and log out. Let's go to our accounts tab. From here, let's select mortgages. Here we can see that John and Rebecca have a 30-year first mortgage for $200,000 at 5.25%. with a monthly payment of $1,104.41. In their creditor's loan section, we can see that John and Rebecca have an auto loan for $25,000 at 4.5% with a payment of $466.08, a MasterCard for $5,500 at 18.49% with a payment of $99, and a signature loan for $2,400 at 17.9% with a payment of $139.65. All of these loans add up to $232,900, which the principal remaining dashlet shows us at the top left here. John and Rebecca also have a checking account with a balance of $500, which is also their minimum balance. This means the program will not use this $500 to pay off debt. In their savings account, they have a balance of $5,238.89 and a minimum balance of $4,530, which the program will not use. Now let's go to our budget tab. This is where you set up income and expense budgets. Here we can see that John has an income of $1,314 semi-monthly, and Rebecca has an income of $2,417 monthly for a total monthly income of $5,045. From here, we can also review their living expenses. We see that John and Rebecca have a living expense budget of $2,850. In other words, this is what they will spend each month on gas, groceries, utilities, and so on, with $415 allocated for food, $300 for bills and utilities, broken out, and $2,135 for everything else in the month. When we add in their loan payments, we can see that their total monthly expenses come to $4,659.14. The Budget and Accounts tab is what makes up the Action Plan and is how the Action Plan is built. From these two sections, the program is constantly looking ahead to predict what and when bills and income are due, and from there suggest strategic funds transfers throughout our payoff time to help us achieve our financial goals. Now let's go to the Action Plan tab. The Action Plan is a dynamic snapshot of your deposits and withdrawals laid out in the order they are due. The dashboard is where the program displays the results of our actions and shows us where we are headed. Now, let's see how the Action Plan and the dashboard communicate with us. First, we will change our principal remaining dashlet to years to payoff. Here, we can see that John and Rebecca's 30-year mortgage, auto loan, signature loan, and credit card balances totaling $232,900 will all be paid off completely in only 11.9 years. Now, let's change our principal paid dashlet to interest remaining. Here we can see the interest they are scheduled to pay is cut down to $81,457 from over $225,000 that they were scheduled to pay in interest before starting on the program. This is a savings of over $143,000 that John and Rebecca will never have to pay the bank simply by following the program. Now, let's change their principal remaining dashlet to interest saved. On the left of the dashlet, we can see their potential interest savings of $143,755, and the program will track their actual savings in real time as they follow the prompts of the Action Plan. In order to show you how impactful the program is for John and Rebecca, we will log into their exact same account by opening a separate web browser to show you the before and after effects of each action we perform in their program. John is paid on commissions, and this week has not been the best week for John, so he's expecting a smaller than normal paycheck. He selects his paycheck and adjusts the amount down to what he expects to receive, $1,100, because he wants to see how much an impact that smaller check will have on his finances. Then saves it to the Action Plan. We can see that the interest remaining dashlet has gone from $81,457 to $81,623, which is a long-term difference of only about $166. So John's able to breathe a little easier. We can also see the funds transfer, which was scheduled to our MasterCard for $1,073, has been decreased to $859. This is because of the decrease in the expected income. The program is always looking ahead to save as much time and interest on your debts as possible, but recalculates when things change to keep you on course. Let's go ahead and update the Action Plan on the left side. Now, John receives his actual paycheck, and it came in even lower than what he expected. It came in at $950. John records that in his Action Plan by clicking Final Transaction and clicks Execute. Once John does this, we can see our interest remaining has increased from $81,623 to $81,886, a difference of about $262. This means that the reduced income will result in having to pay a little more interest on their debt long term. We can also see the funds transferred to the MasterCard and savings account have been rescheduled to the following month. Thus, we can see the program recalculates based on what has happened. Now, let's update the Action Plan on the left side. Now, we'll do a multiple execute and select these actions at the same time. By executing these actions, John is telling the program that they have been done in real time. We are executing our mortgage payment, signature loan, Rebecca's paycheck, our gas bill, and selecting Final Transaction. We are also going to tell the program that they spent $215 out of the food and dining budget. But we won't select Final Transaction on the food and dining budget as they are not done with groceries for the month. This will leave the food and dining budget on the Action Plan. Now that we've completed these items, the program shows our interest remaining has decreased from $81,886 to $80,975, which is a difference of $910.80. This difference comes from the interest paid on our signature loan of $35.80 and our first mortgage interest of $875, as we can see here. Now, Let's update the action plan on the left side. John has received his second paycheck. John kicked it into gear and ended up getting a paycheck of $2,410. Now we select Final Transaction and click Execute. Notice the years to pay off have decreased from 11.9 years to 11.8, and the interest remaining has gone from $80,975 to $79,721. This is a difference of $1,254. We can also see that because his paycheck came in for a little more, the program has generated new funds transfers to execute. Let's update the action plan on the left side and execute these 3 transactions. We've updated our food and dining budget to Smith's Groceries, and we've selected Final Transaction. After executing these actions, notice our interest saved dashlet has gone to $7,968, showing us how much interest we've saved so far. The dashboard is showing John and Rebecca the progress they're making every step of the way. John and Rebecca then get some exciting news. Their daughter Katie is getting married. But along with this comes the cost of paying for a wedding. So John adds a new action estimating the wedding to cost around $7,500 and anticipates the wedding to be on November 30th. Once added, their years to pay off will go from 11.8 to 12.3. And we see their interest remaining has gone from $79,567 up to $86,829, which is a difference of $7,261. This means they will pay $7,261 more in interest because of the $7,500 wedding expense, which we added down here. We also see they had a funds transfer in July to their MasterCard, which has been removed due to the wedding. So again, the program always shows us the cause and effect of each action, similar to how a great financial planner would inform us. Now let's update the action plan again on the left side. Katie then informs John and Rebecca that the confirmed wedding date will actually be on June 30th, 5 months sooner than originally estimated. So John simply enters the confirmed date and saves it to the action plan. As he does so, we can see the years to pay off go up from 12.3 to 12.4, and the interest remaining has gone up from $86,829 to $87,501, which is a difference of $672. We also can see that John and Rebecca will now need to borrow $1,509 on the MasterCard to be able to pay for the wedding on June 30th. Now let's update the action plan on the left side again. Later on, John and Rebecca get the bill for Katie's wedding, and it turned out to be $12,500, far more than the $7,500 they had estimated. John and Rebecca then take a deep breath and update the cost. As we can see here, their payoff has gone up from 12.4 years to 12.8 years, and the interest remaining has increased from $87,501 to $95,508, which is a difference of over $8,000. Because of the higher than expected wedding expenses, you'll also notice that instead of having to borrow only $1,509, they're going to have to borrow $6,509 from the MasterCard to pay for the wedding, as they will not have enough cash available. Now that we've seen the comparison, let's update the left side. Now let's go to the Accounts tab. John has been approved for a visa of 8.9% with a credit limit of $8,900. Once the account is added, John clicks Save, and the dashboard will immediately show how this new visa will impact their long-term finances. We can see that their payoff time has decreased from 12.8 years to 12.7. Why? Well, let's take a look at the action plan. The action plan is now asking John and Rebecca to borrow funds for the wedding from the new visa instead of from the MasterCard. This change results in savings of over $3,100 in future interest cost. That's a big difference in our interest remaining from $95,508 down to $92,390. The program looks for every strategic advantage 24 hours a day, 7 days a week. All it needs to know is the accounts available, and it automatically maps out the most strategic plan to maximize your time and interest savings. Now let's update the action plan on the left side. The $3,100 in interest savings has John and Rebecca feeling pretty good, and they say, you know what? We're about to be empty nesters, and we want to travel the world a little bit. What would happen if we bought an RV? So, they enter the purchase price of the RV, which is $95,000 for 120 months at 2.5% and a payment of $895. Then Rebecca says, let's do this after Katie's wedding. So they hypothetically set up the first payment to occur on July 22nd. Now remember, the program will not lie to us. It will only tell us the truth of where we are today, where we are going, and exactly what's going to happen along the way. As we can see, with the changes made, the dashboard changes to insufficient funds, which means if John and Rebecca proceed according to their plans with the RV, they will run out of money. Let's zoom in on the dashboard to take a closer look. The dashlet shows your expenses will exceed your available funds on 7/31/2017 by $756.11, only $619.91 available in all other accounts. The interest remaining dashlet shows $35,995.69 in interest before they completely run out of money in July 2017. If we change our interest remaining dashlet to time to exceed, we see John and Rebecca will run out of available funds in 27 months. Can you imagine if John and Rebecca had bought that RV without the knowledge from this program? They could have been in some real trouble 27 months from now. So, John and Rebecca started looking at used RVs and find a similar one for $62,000. So they enter that price and the program shows their payment as $584.47. Before adding the RV to the program, we were at 12.7 years. With the RV, our payoff goes up to 17.8 years and the interest remaining has increased from about $92,000 to over $164,000. This is a huge difference for John and Rebecca. Buying an RV, even a used one, will cost them over $72,300 in additional interest. So, John and Rebecca start reasoning this out. Before we started using the program, we were going to pay off in 30 years, they say, and now we're down to 17.8 years, even with an RV and paying for a wedding. That's not so bad. They decide that although they love the 12.7-year payoff they had before, they are going to go ahead and buy the RV. That's what people love about this program. It helps us to achieve our dreams and do the things we love while making educated decisions that help us to get ahead at the same time. Let's update the action plan on the left side to reflect the RV loan. Now, remember, we were at 12.7 years to pay off before the RV, and now John and Rebecca would really like to get back down to that number. So John decides to see what it would look like if he took up a handyman side business he hasn't been doing for a while to see if they can get their payoff back down to 12.7 years again. John decides to plan on about $550 of income per month from the side business. So he adds that to his program, which takes him from 17.8 years down to 12.3, and from $164,752 in interest remaining down to $99,861, a savings of $64,891. In addition, they only have to borrow $4,859 from their Visa instead of $6,509, a difference of $1,650. John and Rebecca are so excited about this. The program calculates everything down to the penny, all the way out until everything is paid off. It sees exactly how much we're going to have to borrow before we borrow it, where the best place to borrow from is, along with showing us the actual cost, which helps us make educated decisions that will actually benefit us and help us to think before we act. Then, simply lays out the exact plan for us to follow. Let's update the action plan on the left side. Rebecca wants to see if they can save even more time and interest. Rebecca calls their cell phone provider and negotiates their monthly bill from $150 to $107, a decrease of $43 per month. Now, experience has taught us that most people would just find another way to spend that $43 every month, which means you really wouldn't be saving anything. But remember what the program does. It looks at every situation to maximize every penny. For some people, $43 does not seem like much. But let's see what the program can do with that $43 per month. Currently, we're at 12.3 years to pay off and $99,861 in interest remaining. After decreasing the cell phone bill, however, we're down to an even 12 years with only $97,153 in interest remaining. That seemingly insignificant $43 used strategically is going to save John and Rebecca over $2,700 of future interest. This also changed the amount that we'll need to borrow from the Visa. Instead of borrowing $4,859, we're now borrowing $4,730. John and Rebecca are really excited about what the program is doing for them. They wondered, though, if they should focus on paying off the RV before everything else. After all, they reason, it does have a pretty high monthly payment and John would really like to have it paid off. So they come into Settings, click on Preferences, and change their program focus setting from automatic to the RV loan, which overrides the program to pay off the RV loan. Immediately, the program shows us that if they focus on paying off the RV first, their interest remaining and years to pay off will increase from 12 years to 12.3, and from $97,153 of interest remaining to $105,061. This means if they override the program and do not let the program do its job, but force it to focus on the RV loan first, they will pay in excess of an extra $7,900 of interest on their debts and take over 3 months longer to pay off. Having seen the cost of overriding the program's strategies, they changed the program focus back to automatic. John then says to Rebecca, what if we tell the program we want to save up $47,000 before we pay off debt, instead of the minimum balance we currently have of $4,530 in our savings account? He makes that change and the program shows it will take 81 months or 6.75 years to build up. Their payoff time has gone up from 12 to 14.1 years, and their interest remaining has increased by over $27,000. Now they decide saving up a minimum balance of $47,000 in their savings account, which only pays them 0.5% interest, is not worth the increased interest and payoff time. So they decide against it and change it back. Now, the important thing to remember is that all of these decisions have been John and Rebecca's to make. Although the program shows them the impact of their decisions, John and Rebecca are still in control of their finances and can do whatever they like with their money. But with the help of the program, they are now making more educated decisions based on strategic calculations rather than emotions and guessing. So what has the program done for John and Rebecca? It has simplified their life and will help them save 18 years of mortgage and other debt payments and over $135,000 in interest payments. It will also help them pay for a wedding, purchase and pay off an RV. And on top of that, they're scheduled to pay off on April 15th, 2027. At that point, if they continue to deposit the payments they were paying towards debt into a simple savings account, earning just 0.5% interest. At the end of 2027, they would have over $27,000 in their savings account. And by the end of the year 2045, the same time they would normally just be paying off their 30-year mortgage on their own, they could instead have over $660,000 in their savings account. This program shows you the cause and effect of virtually every financial decision you make and provides you with proven strategies to turn ordinary finances into extraordinary results. In short, it will guide you on how to reach your true financial potential. Can you imagine where you would be today if you would have known about this program like John and Rebecca 12 years ago? Does the thought debt-free and building wealth come to mind? We are confident that this program will give you a sense of renewed hope and bring relief to the seemingly never-ending financial burden for many individuals and families like John and Rebecca. To see what this program will do for you, be sure to ask about our free savings report.